Capital Markets Union, unlocking funding for Europe's growth. This is Anna. Anna is an entrepreneur with a brilliant idea who's looking for funding. And this is Paul. Paul is a saver looking to invest his money. Unfortunately, in the current situation, he's not getting much return on his savings, so he's thinking about investing in the capital markets. To get the funding Anna needs for her small business, she can turn to friends and family or ask for a loan from a bank. Most small and medium-sized enterprises in Europe get their funds from banks. But banks have less lending capacity since the crisis. Just over a third of SMEs failed to get the complete financing they asked for from their banks in 2013. So where else can Anna get the funds she needs? She could get direct funding from the capital markets. This includes public markets like shares and bonds, and private markets like private equity and private placement. Unfortunately, capital markets in Europe are still underdeveloped compared to other economies, and they are fragmented along national lines. Shareholders and buyers of bonds rarely go outside their own country when they invest. The result? Anna's needs for financing and Paul's money never meet. There is a pool of potential funding for businesses across Europe that's completely untapped. An integrated, well-regulated single market for capital in the European Union would improve things. It would help Anna and other businesses to raise finance more easily and help Paul and other savers to get more from their money. That's the goal of the Capital Markets Union. It's a plan by the European Commission to remove barriers to cross-border investments, diversify the funding of the economy, and reduce the cost of raising capital in order to support economic growth and job creation in Europe. To find out more, go to this link.